How's it going? Welcome back to Financial Enabler Podcast. And I want to talk a little bit about the credit cracks are starting to show in banks. So there's been a lot of tension with trade, right? It's all over the headlines. And there's a big thing, something much riskier that it seems to be happening amongst the regional bank. They're showing their cracks so much that Jamie Dimon is pointing out that when there's one cockroach, there's more coming. So this is the big thing that just happened, and I think it has a lot of people in the banking and credit business nervous. So on October 16th, Zions Bank surprises investors with a $50 million charge-off tied to loans, which they had called apparent misrepresentation and contractual fraud defaults. So the way this is what they're explaining is that there's fraud. So Zions didn't even stop there. They warned that another $60 million in potential credit losses for the quarter could be coming. And then there's the Western Alliance Bank that announced a lawsuit against one of its borrowers. So they're talking about fraud. Both of those stocks dropped drastically. Zions went down 13%, Western Alliance were 10%. And even the ETF, which is KRE, that is the regional bank ETF, dropped by 5% in a single day. So there's a lot of fear. There's a lot of concern in that market because, again, money is being frauded and it's a huge problem. So it isn't just about bad loans, okay? It's a symptom of deeper structural risk inside the regional banks. So if you think about it, much like 2008, there's banking issues. I'm not saying that that's what's happening, but I'm gonna give you the breakdown. 44% of regional bank portfolios are in commercial real estate. Compare that to 13% in large banks. Office delinquency rates are approaching 10.4%, which is nearly back to 2008 levels. And there's a $1 trillion in commercial real estate loans coming due this year, many facing refinancing issues. So I'll repeat the quote that Jamie Dimon said, when you see one cockroach, there's probably many more. So we have an environment that is very similar to 2008. A lot of concern, a lot of risk, potential money that could all of a sudden cause that default, right? And you guys saw the trickle effect. If they have delinquency rates in the office, right, causes problems with loans, causes problems in the market, and we could end up with a similar 2008. Regional banks are struggling, but the big banks are doing great. JP Morgan, Bank of America, Goldman Sachs are all delivering strong third quarter earnings. So even Goldman Sachs had a revenue of 42% and advisory fees went up to 60%. So they're putting a lot of money. So what's the difference? Different revenue streams, lower exposure, and strong balance sheets. The big thing to me is that it shows the risk associated with the real estate market. Okay. So the big banks that have much more approach, has a more broader approach in equities, have a stronger footing. Remember, the large banks only have 13% in commercial real estate. Those balance sheets are much stronger and they're much safer. So for invest, this is a wake-up call. If you're buying financials as a broad sector, be aware that there may be a risk. Not all banks are the same. The winners are still JP Morgan and Goldman Sachs. There's this big old office that JP Morgan just got, which is super cool. I think they look like a tuna can. Those are built for resiliency. Losers are the overexposed regional banks. So whether that's also mean for you guys, if these regional banks are at risk of losing money, where's your money? What's the risk associated if you have your money in a regional bank? Okay, so quality matters, risk management matters even more. So are you investing in banks to create an opportunity, or are you already caught up in a storm? Okay, so I'm gonna keep it simple with that. I want you guys to explore this, look at your regional banks. A lot of you guys have your money in regional banks. I would definitely assess if that's the right place for you and how you're going to mitigate if all of a sudden we had the trickle effect of those delinquencies, loan problems, and then market downturn. So again, quick, short Financial Enabler podcast. Follow it. Go to YouTube. Find me on Instagram. Let's get it.